Our next guest says that the markets will probably begin the recovery long before the virus is over. Joining us right now is Jim Paulsen. He's the chief investment strategist at the Leuthold Group. And Jim, I think you're probably right. Markets are always forward looking. I think the biggest question, though, is do you think markets will continue to recover as you start to see the numbers go up in terms of the cases, in terms of the deaths, as people have people they know who get sick or who, are in these hospital situations? What do you think?
Well, I think I don't know about the virus. We're going to have to let that play out. The experts know a lot more than I do on that, and it certainly could take a while, Becky. But I think the couple things I'd say. One thing is that normally when you go towards recession, the bear market unfolds slowly because we have to debate as the data comes out whether that's a slowdown or recession. This one, very different than that. It collapsed instantly because it wasn't a normal recession. It was one that was created by announcing a shutdown of the economy. So the stock market didn't play around with the foreplay of a bear market. It went right to a full recession. It fell 34% in the first 23 days, and that's larger by a factor of 7 times than the average of all previous 13 bear markets in post-war history. So one of my points is there was a lot put into this stock market decline quickly, and I think the vast majority of it is already over because of that. It's not going to unfold slowly. Second point I'd make, it could still go lower, but if you look back to 2008, it bottomed out initially in November of 2008, and then it proceeded to go down another 10% more, and its ultimate low in March of 2009. However, it was only below that initial November low 9 trading days. So if you would have bought in November of 2008, a year later, you made a lot of money. So even if this goes lower from here for a short period of time, I think if you look out a year from now, it's a pretty good bargain at these levels, as long as the virus does burn out this summer sometime, in my view.
Hey, Jim, you're talking pretty broadly what you think about the major averages. Are there sectors or individual companies that you'd be wary of, though, just because we don't know how this is going to play out? Which companies are going to get assistance, which aren't, which are going to choose to take that assistance, which aren't, and how that could impact shareholders, too, if they do take the assistance. I mean, that's the one big uncertainty that's kind of out there still.
I agree, Becky. Certainly there's going to be, with the type of collapse we're looking at here, in the second quarter, there's going to be bankruptcies and a long road back for certain industries, whether that's airline industries or the cruise industries. There's definitely going to be some of that energy industry. I don't think I would touch any of those, but I do think that I would use weekdays here to add to more risk-on sort of assets. For me, I could chip away at the international markets. I'd add some financials in here, which I think are high quality, but still really beat up. I would look at industrials overall, because I think there will be a manufacturing revival, for example. Maybe some materials stocks, adding some of those in. I would look at adding some of those and maybe on strong days, sort of reducing some of my defensive plays that have held up really well, whether that's utilities and staples, whether it's low vol investing or the like, and positioning my portfolio a little more aggressively in here, not all in one day, but trying to keep an eye on what it might look like a year from now rather than what it might look like 3 months from now.
Jim, is there anything that made you feel like, okay, this was the turning point? Was it just the incredible lows that we saw?
Well, the whole, like I said, that 23 days, we've never seen anything like that, Becky, going down 7 times more than any other bear market in that span of time. I mean, I'm not sure how to look at that. But there's no doubt that there was a lot of panic evident in that collapse. And it's certainly encouraging to see the bounce we've had. I do think at a minimum, it suggests that the cascade of selling is gone. Anyone that wanted out of this thing is probably gone. They've sold and they're done. So that's a good thing. And what we don't have yet and what we still need to get is buyers. And I think that if Dr. Gottlieb's right and that rolls over sometime here in the next 2 months, we're going to see some buyers.